So let's go through the questions in Slido. We'll do a bit of screen sharing whenever we need to. So I just saw that this first question just came out not this morning. Yesterday when I saw it, it's not there. So the first question is to you, thoughts on Bitcoin. But I think this is quite generic, right? But let's get more. I'll put a little bit more details into these questions. For example, I think we have talked about Bitcoin for some time, 2 or 3 years back, right? But recently, after this recently there's this Bitcoin halving, and then there's this Bitcoin ETF that's coming out. Are you monitoring all this development in details? And what was your thoughts, and what's the update compared to like maybe 2 or 3 years ago?
All this halving is a known thing, and in reality, kind of like aside from unless you're a miner, whereby your supply goes from the overall supply goes from 900 a day to 450 a day, right? It really doesn't affect what's if you own Bitcoin, it really doesn't affect you because you don't have to keep the lights on. There's no electricity to pay for and such things. In reality, people say that the supply is halving and things, but the Bitcoin on the market is still on the market, and people who hold it can still take it out to buy or sell, whatever they need to do. So, uh, the supply is really fixed, lah, and the remaining how many percent left? I think less than 8% left, right? Is just going to be that, lah. It won't really affect the overall supply much at all, lah. Yeah, so that's what I think from the supply side. As for from the ETF things, basically ETFs are just for kind of like you can say for the older folk who want to buy who have no interest in managing any of the custodial solutions kind of things at all. So they will just buy the ETF to have some exposure, and that is what they will do. Yeah. So that is for the ETF side and for the supply side. But what I want to touch on more is that actually the fundamentals of Bitcoin has not changed, and it is that it is a hedge against like the world money order, the world currency money order, which if you kind of like have you heard about like this thing called the impossible trilemma?
Yeah, I heard about it. Like you can only control capital flow, and then you can kind of control certain things. You can only choose 2 out of 3, right? That's the concept. Talking about
Yeah,
sovereign,
so
how much they can control.
yes. So the sovereign, how much you can control is based on that three things, which is either you can only choose as a currency holder, right, or currency issuer, you can only choose to maintain 2 out of the 3. So the three is free capital flows, monetary policy, and the last one is a fixed exchange rate with others, right? So these are the three. You can only hold two. And the US is actually only doing like free capital flow and what's that? Monetary policy. So the exchange rate is free floating. Whereas like you compare to something like China, which will be that free capital flow is restricted, and then they are trying to do fixed exchange rate and monetary policy. So you can see that different countries will do it differently. Like EU will be doing something like mixture as well. So there's all these kind of things that's happening. So Bitcoin itself, if you look at it from this perspective, that it is a issuer, but except the issuer is decentralized, and is actually doing independent monetary policy because the monetary policy is really set by the code, and it's doing free capital flows because anyone can come in and out. Yeah, no issues there. So you can kind of see that it becomes like its own decentralized central bank in that regard. And that is because it is not a country, there is no like economy that is actually supporting. And because it is also distributed everywhere around the world, so it's very difficult to actually remove. There's no central bank to destroy after all, unless you say you destroy every single Bitcoin node, which is quite impossible unless you shut down the entire internet. And even then, if you shut down the entire net, when you turn it on again, someone will start up the Bitcoin nodes again at some point in time. So from that regard, the Bitcoin itself is like a central bank with no nation to it. And that has its own novelty and abuse, whereby people could actually just put into this particular central bank's currency that everyone knows what the monetary policy is, that will not change no matter what because it's really fixed there. And the world currencies that are US dollar, yuan, whatever it is that's moving around, they all have this currency that they have to actually, it actually keeps them in check because they cannot just do whatever they want, because whatever that they do, there's always this dynamic whereby people might think that what they are doing is too extreme and they move over to Bitcoin, even if it's temporary for it. Yeah. So that's the kind of dynamic that Bitcoin now holds in this currency market, in my point of view.
Yeah, but there's nothing to do. I mean, that's the setup and also the features, right? It doesn't change compared to 5 years ago, 3 years ago, and now, right? But what has changed is just the demand because of all these ETF that coming up. Other than that, there's no tangible changes to it. Given that now price already like hitting all-time high, right? All these are just a function of demand, got nothing to do with the supply, right?
I would say if because sometimes I follow the tech space as well for the long days of Bitcoin, and right now there has been a push towards like more custodial solutions and towards more like what they call it as like federated systems and things. I personally do not agree with it or think that it is a useful thing, because what they're actually doing is that the whole basis of Bitcoin is that you actually hold your own coins, and there's a saying, not your keys, not your coins. And it's about like this self-sovereignty concept whereby you hold your own things and you manage your own coins. And in the push towards like more accessibility to the public, there have been like some proponents in the space that actually want to create like solutions that are more like, how would I put it? The controls of the keys are given up to like the custodians, and then the custodians actually help to manage or help to act as like a second safeguard, uh, essentially like a bank like this. And I think that this approach to increase accessibility is not particularly appealing to me, because I didn't get into Bitcoin for this in the first place. Yeah. So there is this again, like the protocol of Bitcoin, right? Is managed by people, and the consensus, kind of like the nodes that what versions that they choose to pick up, and like the miners, what versions that they choose to mine. It's all like kind of like a consensus voting, and what changes are accepted or not accepted. It all depends on people whom are vested in the space, whom monitor and whom actually look at the code and they so-called like act or nag the changes. Yeah. So far it's been quite all right in that the people still generally ascribe to this self-sovereignty concept whereby not your keys, not your coins, and the decentralized whole things and whatever. You know the rest. Yeah.
Yeah.
I'm just saying that there has been like a slow push towards this accessibility in favor of accessibility and disfavor of this self-sovereignty concept. Yeah. So I also look at this space and see, and as long as they can do what they want, but as long as like they do not change like the main consensus of Bitcoin, right? If they want to just add on to it to like make their own solutions, that is not, is like kind of like an optional kind of thing, right? That means like a so-called soft fork or their own built on top of it layer, then that's fine, up to them. But if anything that it goes down to the main layer, I mean like the main level 0, level 1 kind of things, then that will be a cause of concern. Yeah. And hopefully it doesn't reach there. But this is what I have been observing in the space.
Thanks for your input on this first question. Let's move on to the other one. What do you think of Adobe earnings? Okay, this one let me answer first. Then I pass to you, YCX. I think in this case, right, Adobe earnings, I actually haven't really like follow Adobe in details, but I will just give the audience some like how I look at companies that I haven't studied in details before lah. So usually these are the, let me just go to the financial. Usually these are the key financial metrics that I'm looking at when I study a company. And I mean, all these chart, you can look it up from, let's say, like macro trends and some other sites. They are quite useful. So the first one, I look at revenue and then look at whether operating income, specifically looking at whether they are increasing or not. Because if they are stagnant, how much you value it will be very different, right? Then look at the margin, could be operating margin, the income margin doesn't really matter as long as you compare, like looking at the trend, whether they are, sustainable or keep coming down, right? And then ROIC is also one, that's quite important one. And free cash flow, you look at whether free cash flow is increasing or is it like stagnant. In this case, I would say most of their metrics looks really, really impressive, except for free cash flow. As you can see, the quarterly free cash flow over the past 3 or 4 quarters is coming down. So free cash flow itself coming down, it's not a problem as long as you know why it is coming down. For example, maybe they're spending a lot of money into all these, Nvidia GPU just to increase their capex for growth and so on. So all this can affect the free cash flow. But just looking at the chart is quite hard to know what was the reason, right? So you need to dig into more details to find out. So this is just like one overview. And then this is on the financial metrics part. The other things that I think is also like, I'll argue that even more important than just looking at the metrics is to know the business model and to know what the company is working on right now. Are they disrupting others? Because usually if a company is not disrupting others, right, potentially they are the one that are getting disrupted by others, whether at the moment, like currently, or is it like coming soon, or is it like coming sometime in the future? So usually what I would do is like just maybe do some new search to see what are the stuff that they're working on. So here are just a couple of example, like are they spending enough capex, or are they spending enough effort in terms of like propping up their value propositions. So in this case, you can see that Adobe in this world of AI, right, generative AI, I can see that they are putting a lot of effort in. The part that is a bit difficult is to know whether they are winning, because usually in this phase, right, it's not like just Adobe competing with their, like the large companies, like large competitors. Sometimes it could be just like a small startup that popping up, right, and then start getting market share. So these are the things that you really need to get into more details to find out. So these are just a couple of examples. So I'll pass to YCX just to hear your view when it comes to questions like this. Like do you follow? What do you think about the earnings? What do you think about this company? What are the angles that you are monitoring when studying specific companies?
I agree with what you say on those things. But for me, right, the screen is
Uh,
it
uh,
still sharing?
I can see the Google Trends, and on the side I saw the ChatGPT 4.
Okay, so you all can see my screen, huh?
Yep.
Okay, so I agree with what you say on those things. Like understanding the business model is the most important thing. So let's say you already understand the business model and you look through the trends and things, whatever it is. Other key things will be that you can always go to Google Trends and you search Adobe and see what's the interest over time. And of course, this region thing is not really accurate, but whatever. One of the key things is that you can look at these trends. What is like the past 5 years trends or things. This is actually more of like a more momentum thing. If you are looking at what's the momentum, what's the attention span of people, how Adobe is actually like taking up the mind space of people, because if they are on people's minds, then it should reflect on the Google trends that you'll be searched on. Like for example, if I look for Nvidia, there's probably like, you see there's a recent increase. You can kind of see like for all the different things that there's always a trend, like recent increase and that kind of things, right? This actually shows the attention and the momentum if you are actually like looking at these kind of things, right? So aside from that, this is more of like the short term kind of things. It's not really fundamental, but it does kind of like give you an understanding whereby what is the attention span, where is the people actually focusing on, or where the retail mindset or where the analyst mindsets are actually looking at right now based on this trend. As for like, let's say searching for more of like more in depth, because Adobe is a tech, is kind of like in the tech space, right? So you can kind of also go to Hacker News and then you can search Adobe and you see this when I search, this is the kind of things that I see over here. And this is for all time. So for all time, I can see that what are its major things that are put up over here. You have like Figma for 20 billion. Oh, by the way, I haven't actually done any of this. I just searched up because I didn't really look at the questions. But anyway, so I just see there's a Figma 20 billion and then there's like all these whatever links that's happening, right? So these are the all-time stories that are searched over here that is more of like the techies news that are you can see their comments and things. So I will actually, let's say if I'm really looking into Adobe, I will look into because it's in the tech space, I will look into like maybe like all these threads to see what is the general consensus amongst users and amongst developers for this because Adobe their target audience is these people anyway. So I have to kind of see what do they say. And then after that I can of course search for like the past year to actually also see what else is you can see that from here there is actually more of like the generative AI things that are taking over. A lot of the articles are about generative AI. So these are the key things. So when I read all these, then I kind of also understand in this space what exactly that they are doing, who are their competitors, what are their strengths, their weaknesses, what do their users complain about, where are they expanding into, why are they buying Figma? These are all the questions that come up to mind when I do this, and then I read and understand. And of course, the last thing to actually do is to look at the investor relations page, whereby what I would do is there's all these earnings press release and script and slides, all this, right? So at the minimum, I would say to look back at least like 4 or 5 quarters, so you can kind of see how the transcript actually changed over the past 5 quarters, what the CEO and CFO actually say to the analysts and what they report, and have they been sandbagging or have they been like over promising kind of things that you can kind of see in their what their language and how they actually present and how the analysts actually ask and uh yeah, these are things like the also the numbers that we see over the time and how they present it. That's important to know. Then of course there is also if we look at 13F, 13f.info, we can search Adobe as well. And we can kind of also see these are the ones that whom are the buyers lah. These are the people who may have bought, and you can compare against like the past quarter, right, to see whom are the people who may have bought over time and what changes have been made. Yeah. So this is like more on the institutional side. So there's a lot more that I do, but off the top of my mind, these are the few things I would look at first for to kind of understand what this stock is about. Well, of course, I don't invest any in Adobe, so I'm not that into it because as a trend, I'm not really that into the design space. Yeah, so yeah, this is what I would do to actually see. That's all.
Yeah, I think for Adobe, I also I don't own Adobe stocks. But I think as a as an investor, right? When it comes to all this generative AI, I think one concern is that whether like a new startup that will come out and just take over their shares, right? For example, that startup could be just open AI, right? In the past or currently, people are using their software to generate all sorts of graphics, design, and so on. Now with open AI, with AI, it can be just like one prompt can change the entire workflow altogether, right? So I think those are definitely some area where they may get disrupted, or maybe they can also, enhance their own AI offering and become even stronger, right? That could also be the development. So need to observe the details, like whether they are executing well. So you cannot like just invest companies like this and think that, oh, things will be status quo, will be unchanged. Like their margin, everything will be constant. It's not the case, especially when within one area there's tons of disruptions. And what I observe is that for AI, right, these areas are definitely lucrative area because designers' salaries are not cheap, right? If it can be done using AI, even if the quality is just 80 or 90% of the designer, but the cost, they can potentially cut it by, like 50, 80%, right? So it's still an area that, I mean, potentially disrupted by AI. So more
So
changes means that more things to monitor. Yeah.
the last thing I would say is that Adobe, like their main customers would be the people whom are designers who pay for their software to use, right?
Yep.
So
Yep.
whatever the amount they pay could be tens of dollars or hundreds of dollars a month or something, depending on how professional that they are.
Mm.
And because this entire professional thing is from the top down, so the the juniors will actually look at what the seniors are doing, and then they see that the seniors are using this to actually generate out products that people will buy or pay for. It means like be it like some design, that some poster design, or some videos or whatever it is. So that's what they see, and that's what they would emulate and do accordingly, right? So from this, you can kind of also look, let's say from a Singapore perspective, if you have access to like those graphic designers or friends, or you know some of these companies, or you talk to them and you see, are they still actually buying Adobe products? Are they paying for it? Do they have like a subscription? Do they have any like what are their complaints about it?
Yeah.
Any things like that. And of course, lastly, you can also download Adobe software to actually use yourself to actually understand, try to follow through their tutorial guides and understand, or do you, maybe you just take it as like a learning journey as well, spend like maybe 5-10 hours to learn and see whether you know how to use it. And from there, you also kind of understand the product, because when you are using the product, you understand what the issues the designers and developers are facing. And then when that gives you a greater understanding on how these designers and developers think when they use the product. And you can also kind of also understand more that whatever competitors are coming in, they actually have to deal with this to actually simplify this. And immediately your understanding of the company is much deeper. And whenever there's like some new thing coming in, right, you can look at it from the lens of the designer, whether it is something that's actually useful, or it's just like a gimmick or nice to have, but not completely necessary for them.
Because these are not an enterprise software, right? These are actually, it is enterprise, and also it is used by independent content creators. I think try it out is the best way to know lah. Okay, next questions. What's your opinion on options trading? Do you recommend any resource in particular to learn about it?
So you can just go to this optionsstress.com. I mean, this is free. You can create an account, whatever is free anyway. So let's say you want to long a call. So you just long a call, like let's say this Tesla, or you want to change to like say Adobe. I can change to Adobe. And then like let's say you just want to long like a 550 call. What if you want a 550 call, and maybe expiration you want to put like January, so it's like a year away. So then you can kind of see that when you move the dates, like how many now today is this is the pricing at here, and you this white color line is what today's price is, and this blue color line is what kind of like what you're paying for. Yeah, so this green area is like the profit. The max loss is what the premium that you paid for it, right? So as you can see, you drag the slider. When you drag the slider, the premium actually goes lower and lower until all the way right you can see the range further a bit. So let's say when you buy this 550 call option, then you can see based on the graph, this is the kind of profit that you will gain based on what price it actually goes to, right? Let's say if it jumps to like 600 today or tomorrow or maybe in the next week, then you will have gained like 5,700 around there for it. And then let's say if it goes to like 180 days later, then that 5,700 would have degraded down to 2,600 profit. So these are the you can see from this, and of course you can always like add more things. You want to sell a put, you want to this will be a synthetic long, and then you want to do whatever things it is that actually put. You can just use this option strat and just create your positions and actually see and save it and look through what it means. Yeah, then that would tell you like how much you are making, and you have a clear view of what's happening. Of course, there's this thing called implied volatility over here as well, which you can play with. And this is what I usually talk about, which is that if there's a lot of like, just now remember what I go through on the Google Trends momentum and things. So if the interest is high, most likely this implied volatility will go up as well. So you can also see how it affects your profitability over time. That's like the main gist of it in the interest of time. The rest of the things that you kind of like want to learn and things, there are many courses online, but I would say that any course that you pay for, unless you really spend the time and effort to go and learn it, and if you pay for it, it may also be dubious advice anyway. So the best thing would still just to be look at YouTube videos or look at articles online that are just all free and accessible anyway. And then just learn from there. Like you can see my ChatGPT on the side, right? You can also type like what is a long call, what is risk, what should I buy it? You can always ask ChatGPT and see what it returns you. And then this straight away you can read, and then from the terms itself you can also see, I can just ask like what is this premium, elaborate. Then from here you would learn very quickly, and there's no need to like actually buy any course or anything like that, because the ChatGPT is really kind of like doing everything for you. Yeah. See, it just tells you and you can read through and try to understand, and then you can use this option strat thing to actually plot out to see that kind of things. You can even ask ChatGPT to calculate for you to see whether it makes sense together. Like you can say like, if I bought 550C for 5,500 55
This AI tool will take your idea. Yeah.
and price goes up by $10, IV doesn't change, how much is it going to be? Then you can kind of like see the things are. So this is kind of like what I do to learn quickly, and kind of like of course you cannot really like always believe whatever ChatGPT says, because as you know is it may not be entirely accurate. But then again, if you go to a lecturer or you pay for a course, the course person may not be entirely accurate either. So there's always, on your part, you need to do your own checks to actually look through. Yeah, it's just that this way of doing it, you are just paying like $1 a day for ChatGPT 4 to actually like know about all these. And yeah, you can keep asking things, and over time you learn and do it. So, but the main gist of option tradings is that there are many bad plays, there are a few good plays, and there are many average plays that are just directionally based. So if you understand what I'm talking about, then you will know that majority of the time, a lot of the option stuff is to do nothing, and depending on your own character, my character is more of like I wait for the right moment to enter into options positions. So waiting for the right moment to enter could be like a few weeks, could be like a few months. Sometimes I don't do anything at all for a few months, that kind of things. I'm just waiting for the right opportunity to enter into a position which I find is beneficial. And of course, overall, whatever position that I enter into, it has to be based on the foundation, which is that the fundamentals. I will not take a opposing direction trade against my fundamentals. That which is to say, if let's say I say Adobe, if I value it at like $600 and I see that the implied volatility is low and right now it's at $500, I would think that okay, it is a good time, and I think based on the implied volatility is like kind of in like the 30%, the 30%, the 30th percentile kind of things, right? Of the IV rank, then I would just think if I have like the spare amount of money that here and it looks like a good bet, then I would just buy a few long calls on this Adobe at this point in time for this particular thing, because I think that Adobe is worth 600. This is the example that I'm giving. So let's say if I think fundamentally Adobe is worth like 500 today at where it is, then I might think that the implied volatility is low and it's only 500, and there isn't much gain for me to actually buy or sell the options now because there's a lot of risk over here. So I will not do anything at all. That's the other examples.
Good illustration on the site. Actually, I used that site before. Quite useful for illustration, especially those who do like a more complicated strategy, like you would do spread trading. You don't know how it looks like on the payoff diagram, right? I think that site is really cool. You can just look at it, like know exactly if the price hit at what point, then you are making money or losing money. So I think that one is quite useful, but you need to learn a bit on how to input the stuff. It's quite details, all the parameters you can put that in. Okay, I think on this topic about options, right? Just now, I think there's one. I think the question is asking like, is any resource in particular to learn about it, right? I would say I would recommend those that is paid one. Okay, let the horse seller preach to you like why his or her course is good. But in terms of the free resources, right, I would say maybe just this one. I think this is one of the popular one. It's about 3 hours in total. You can look it up on YouTube. So if you are patient, I think on a minimum you should be patient enough to go through the 3 hours details. And these are still very basic fundamental things about option trading. So I think this is like the bare minimum, because on top of that, you still need to try out like what YCX just shared, right? And then learn from the experience. It's a lot more useful than subscribing to a course and then maybe not spending enough time to go and understand things. So I think that's on the resource part. But
so you have to set aside like some amount of money. I mean, like maybe 10,000 or something like that, right? Whereby this 10,000 is kind of like you are entering into the casino and you are trying to learn how the casino works. You can read a lot about the books and whatever things like that, but going into the casino to actually play is an entirely different experience, and you learn differently from that. So if you want to actually play the casino, you actually have to go into the casino with like an expectation that this amount of money that you play, the chances are maybe 70 to 80% of whatever you start off with, you're going to lose before you finally get a hang of it. And then you can start to try out different strategies and lose again. And then finally, you find some strategy that you think it works for a while, and then you lose again. And then you try again and again until you finally find something that it works until you lose. Then it becomes a matter of like how you allocate amounts, right? And how you kind of like split up your pots to actually see what you can do, how you let your winners run, that kind of things. But again, a lot of this is depending on the time frame that you play. Is a lot of it is actually you can do everything right, but you could still lose to luck, just like in stocks like that. It's just that it's on a more leverage basis. That's about it. Like you can say that you want to buy like Google, and maybe Google had some issues or some antitrust laws to ask Google to split up their businesses into search in one corner, email in another corner, whatever kind of things like that. And if it happens, it happens. There's nothing much you can do. The same thing goes for options, just that the time frame is much shorter.
Okay, let's move on to the next one. Do you have plans on investing outside of tech space? I think this question is asking for me, because it seems that on the surface, my portfolio, most are tech companies. But actually, I won't actually call them like tech companies, because nowadays, all companies are tech companies, whether you are adopting everything, or you are just adopting a small part, right? I don't think tech is like an industry. It's applicable to all. So, but how I will see is actually I will look into the companies and see which industry or what kind of business that they're having. For example, right, like Amazon, people call Amazon, wow, one of the big tech, right? But actually I see Amazon as like two businesses, right? One is e-commerce, the other one is just their cloud service, right? So just understand the cloud service business and understand the e-commerce business to help me understand the company. I don't like lump them all together, because let's say Amazon business versus Google, they are very, very different. And Google, I'll just see them as like an advertising company. So they're competing with Meta, they're competing with traditional advertising. I think looking at it this way is a lot easier, because sometimes certain trend affect certain industry. Like for example, sometimes digital advertising also face some headwinds, right? So I think and those headwinds only faced by Google and Meta, and not so much by Apple, for example, because Apple business is essentially selling phones, computer, right? So these are all very different. Although you can just lump it up that call them, these are big tech, right? So I would say tech is just a too big a category, and it's not useful to be used as a label, lah. So that's how I see it. That's why I think that whether I would go outside of tech, it really depends, right? On, because I don't think it's applicable to call it like tech or non-tech. So that's why a bit hard for me to answer these questions. I'll just understand for any business, right? It could be so-called in the big tech or outside, as long as they have a valid business model and they are profitable. I don't think I'm staying away, right? It's just that now my preference is on all these companies, because these are the companies that I'm familiar with now. Any comment from you, YCX, on this?
I have around 10 to 15% oil, energy, like oil stocks. Yeah. So
Still holding, right? Yeah.
yeah. I mean, they are not doing like bad at all. They give like good dividends. Like even after withholding tax, I'm getting like 4 to 5% out of it.
Mm.
And the oil stocks prices generally remain stable, actually increased by a bit. So I think that as like a kind of the reason why I buy oil energy in particular, right, is also because I know that as tech increases, there's a high appetite for energy as well. So more tech means more energy. So more energy means like more productivity anyway. So that kind of process whereby I think that this is a good hedge against tech, and also against like war or whatever crisis that could impact supply chains, because usually when supply chains are impacted, the first thing to actually move is actually the energy stocks, because because supply chains are fundamentally like very correlated with energy. So that's what I buy as well. And yeah, generally speaking, it's more of like these two spaces, because I am familiar with these two spaces. Yeah.
This one I'm quite interested to hear your view. Do you see that tech will have a bubble one day, or will keep going up and no limit?
You will have a bubble, but you won't be able to predict it. So what is the point? I mean,
Yeah.
you can say that there will be a bubble when SPY is at like what now it's like 5,002, right? I'm not sure, I can't remember. But you could say there will be a bubble at 55, it will be a bubble at 60, bubble at 62, 65, 67, to whatever number it can be, right? I mean, there's always people who are going to tell you that there's going to be a bubble next, there's going to be a this and that. But honestly, for me, I don't think it affects me, because once I understood that it's about how you allocate your entire resource, right? That means all your portfolios and things like that. So that you can be invested in what you believe in fundamentally, but at the same time, you should also be allocating in your portfolio in such a way that you are not going to be like living off the streets, or like having nothing to eat, or you are like one investment wrong or one job loss away from like losing everything. So that shouldn't be if you are facing any kind of those situations, right, then that would mean that you actually have to change your allocation so that you don't face that situation in that regard. So if you are not facing any of that, then it's all about like you have to kind of trust yourself and trust your own intuition and where you think things will go and work it out that way lah. Yeah, there is no other way to actually mitigate this because our information sphere, right, is just limited to that area. Like in 2022, like January, if you say that Russia will move against Ukraine and start like a war, who knows, man? Nobody will know, and there'll probably be people who tell you that that's unlikely to happen or whatever it is, or this kind of things. It just happens, and you just have to kind of like deal with it, and that's about it.
100%. I think usually people, I think there's this group of people who maybe is because too pessimistic. Sometimes they keep thinking about, market experience bubble in the past. Now it looks like the returns is not bad. S&P 500 at all-time high, so it will come down in the future, right? And then for if you have this kind of feeling and thoughts and you still stay invested, I think should be fine. Like at least you have one leg in the market, right? As the market continue to go up, you still benefit from it. I think those are fine. I'm just having concern for those people who every day think about all these bubbles, think about market is overvalued. They just stay away, stay at the sideline for too long, right? Say for example, if you just stay away and then market just go up by 15% for 2 or 3 years, right? So you go up by 45% by the time you suddenly realize that I stay on the sideline for too long, and getting into the market at that point is even harder. So there will be a strong dilemma on how to react to that, right? So I think that's why it's a bit hard. Let's say if you totally stay out of the market, I think the sensible things to do is that, let's say if you have concern, you say you put more into fixed income or into cash. I think that's fine. It's just that you cannot like get out completely. Even if you are very pessimistic, you think that market is overvalued, I think maybe just leave like one quarter of your capital in the stock market and still benefit from that, right? It's a lot easier emotionally also. So I think this is depending on your asset allocations, like what YCX just mentioned.
I also like to share that if you do not invest, right, you can always look at like Singapore. I'm not sure how old or young you all are. So if you look at like 10 years ago, how much is like the KFC meal? I think it's around $5 or $6. Now today I go and see recently, just 2-3 days ago, I just go and look at the 2-piece meal. It's really $10. So so it's like increased by 80-90% or 100% around that levels, right? So has your salary actually also increased by that 100%? If it has, that's good. But you also have to kind of also consider that your salary is you're only earning your salary on like this yearly, that means going forward, this yearly thing. Whatever that you earned beforehand, right, on that lower amount of salary, that base is actually losing to inflation at whatever inflation rate you are set. Let's say we say about 4% a year. So that means if let's say you are earning 100,000 per year, and the first year you have 100,000, the second year you have 200,000, the third year you have 300,000. That 300,000 you actually have to reduce the percentage, right? But it's also kind of like the reverse, is compounding depreciation in that regard also for whatever that you put in cash and you just leave it there without collecting any kind of interest or investment or whatever it is that it is. So the key thing over here is that, again, is back to the allocation thing. You allocate enough that you are not going to like just miss your rental payment or don't have enough to eat for like the next 4, 5, 6 months. But you should always, the rest of the money, you should kind of like put it into investments, even if it's low yield or high risk or whatever, that you have to put it there, because this is how the world, the market works right now under this kind of currency regime, whereby it's fiat money and interest rates. Giving out the money is always going to be increasing the money supply to keep the world flowing. So this is how you have to actually work into this trend. So you have to kind of consider, is the risk of a bubble that usually happens, like maybe a bubble crash that usually happens, like substantial one usually happens like 1 in 10 years, around that kind of things. Then you have to balance the risk of this 1 in 10 years chance against the risk of like in 10 years, your monetary value of whatever you're holding drops by like 50% or 40 to 50%, that kind of risk. And you have to work it out yourself, either mathematically or intuitively to find out what actually works for you.
But let's say if I change the question slightly, I ask like, is it we are experiencing bubble now, given that, you see that AI stocks also going up so much, right? Are we already in the bubble? What do you think about this?
Usually, you will have to look at like what is the earnings growth. I mean, across the market and across like sectors. Like, are the earnings growth actually like going up in line with like the stock price growth? So if let's say the earnings are going up by like 10% and the stock price growth are also going up by like 10%, I think that's pretty fine. But if let's say we are seeing things like earnings growth is going up by like 10%, but stock price growth is going up by like 100%, then I would say that there is a kind of like there's a bit of like risk over there, and I wouldn't allocate as much into that. Yeah, unless of course this is again this entire thing is about allocation and it's relative to other things because you have to actually look at what's the alternative, what's the opportunity cost of something else, and work it out that way. Yeah. Actually, for all I say about all these mathematical things and working out, right? For me, I do it kind of intuitively. So I'm not really that I don't exactly like have like say, oh, fixed amount that says if this happens, I will put 10% here and 20% there, that kind of things. Not really. It's more of like an intuitive process because I find it's easier to do it this way and I can focus more on like understanding the fundamentals more and instead of worrying about these more macro related things that are harder to actually control for or predict compared to something that's micro, like how well a company does. You can easily just go down or look at its users, look at its look at its upstream and downstream to kind of like know. So I focus more on this micro aspect than the macro. The macro is just kind of like I look at it and I think that I'm doing fine. I'm not going to like die off tomorrow if something happens or whatever. Then I'm fine. I'll just leave it there. Yeah, and not worry so much about it. Yeah.
Okay. Let's move on. This one also quite interesting. What do you recommend for learning about finance for those without business or accounting background? So, YCX, you have any resource or any things that you will recommend?
I guess
Aside from ChatGPT.
it's really just ChatGPT and kind of I would say cut down on the video content, like cut down on like the mobile video content and kind of like sit in front of the computer and type things into like whatever search engine that you're using or whatever. You can also type in your mobile phone, but it's less wieldy. You have to be good with a keyboard if you want to search fast and read fast and think through things. And then of course you need to have not just that you read, after you read, you must kind of like, if there's things you don't understand, you can always copy paste the text, put into ChatGPT and try to like understand it and ask questions on it. And then you have to keep questioning. It's kind of to be inquisitive because finance can be as shallow as it is or can be as deep as you want it to be. And sometimes, a lot of the times, like going very deep into finance doesn't mean that you're going to, doesn't mean that you're going to get more profit or whatever out of it because that's just the way it works. Yeah, it's more about if you really want to, the majority thing about learning about accounting and business, all this, right, is to kind of like gain the conviction to actually invest or to actually put your money where it is, that kind of idea. But you cannot be too focused on the numbers. You have to actually know the business. The business is more important than the accounting because when you know the business, the accounting is just kind of like a reality check on the business to actually see what the business says. Does it make sense? The accounting, does it make sense? But as you know, accounting is only, you can only see what's happening now and what's happening from in the past. You can't really see what's happening going forward, but it just grounds you in that reality. Yeah. But I would say, focus more on the business things, understand how the business model works, understand all you can about business because it should take up about 70% of your decision compared to the accounting that takes up 30%. For me, yeah.
Yeah, I caught one keyword from you, inquisitive. Means that you need to be very active to pursue whatever topics that on your mind, right? Instead of like relying on, for example, like relying on TikTok to feed whatever the algo want you to look at, right? So what is a very active kind of learning? Like you're curious on certain topics, you just go deep into it, right? I think that's definitely helpful instead of like going all over the place and touching like just very tiny surface. I think that's really not useful because your understanding on anything will just stay at the surface, right? Which I think is a lot more prevalent nowadays with all the short form videos. So I think my comment on this is that maybe just aside from what YCX said, right, just like sit on desktop looking at various different documents, I would say spend time to pick up one topics and go into details. For example, picking up a book, any business or accounting book, I think anyone is also good because it will be very focused on certain part and just go deep into it, right? I think books is a good resources. Other than that, if you are very serious about like learning about business and accounting, I think you can just like, go and take some exams. For example, like CFA exams. I won't say that after you take on CFA exams, you'll become like a lot generating higher returns. I don't think so. But at least from the learning perspective, right, you have a more kind of a structured way of learning because there's already a syllabus there and you can go through topic by topics through a formal kind of learnings and you are learning it on your own, right? So you can learn at your own pace also. Even just studying without taking the exam, I think also works. It's just that by taking the exams, you are treating it a lot more seriously. And here, I just want to like go through with the syllabus, like just very quickly. This is the what they call the CBOK, Candidate Body of Knowledge. So for those who already took the exams, right, you can think that okay, they at least cover all these topics like ethics, the quantitative methods, all the maths are here, the economics, the financial statement analysis. These are the accounting stuff, and then the corporate stuff. Equity, fixed income, so different asset class, derivative also covered, alternative investment also covered, portfolio management also covered. So it is quite like a how to say like a very fixed kind of syllabus that you can go through. Then after you go through, at least you have good knowledge about the finance. Maybe it's not like very in-depth, but at least it serves as like a structured way of learning for those who are more into that. If not, I think any books, right, will be helpful compared to videos. Videos, long form one, I think still okay, but those very short one, like let's say 5 minutes, how much can you learn by just watching 5 to 10 minutes video, right? So it will be very surface. And from the content creator perspective, right, just for your information, right, we always have this dilemma of whether putting up content that is in depth or those that are very surface. So the dilemma is that if I create something that's in depth, right, nobody will watch. If I create something that's very surface, right, people will say, oh, yeah, this is good content. Because at least people bother to watch it. 5 to 10 minutes video is not very long, right? They can afford to spend that. But if you talk about one topic and you spend 2 hours in it, I think people will just like they don't even bother to click on it. So that's a dilemma. So if you only consume content using like video forms, right? Just be aware that whatever that you learn, right, is only at the very, very surface. So that's some insights that I can share from the perspective of a content creator.
The point about videos is that they condense the information, but in the process they leave out a lot of the details
Yeah, exactly.
get to the point, So
yeah,
because they leave out a lot of the details, right? The mindset to actually have is to question and actually doubt because whatever that is being presented to you is very it'll be more opinionated because it's not the whole thing. So when you actually question and doubt, you can actually check and actually learn from that process. But if you are not doing any, then you're just accepting whatever is being said or whatever is being shown to you as the truth, then it is much harder to actually develop the kind of like critical thinking that is required. Critical thinking leads to more critical thinking. So that's basically the more you actually search, the more you actually learn how to search, and then it leads to further understanding and questioning, and eventually understanding and learning.
Okay, I think I'll go swap the sequence because I think these are questions that may not be so relevant to you, YCX. I think there are quite a number of questions that is directed at you. So let's go through that. I think we'll start from here. How many B200 will Nvidia need to sell to recover the 10 billion R&D of this chip? And how much do you think is the markup for this kind of products?
The B200, not B200, it's more of like B100 because there's no pricing for the B200 yet. Can you hear me?
Yes.
Yeah, can.
Yeah.
Okay, so B100 is probably estimated around 40 to 50,000, that kind of price range. Yeah. So
Per GPU, right? And then they are not selling per GPU, right? They're selling a rack, right? Usually.
yeah lah. So per GPU is around that 40,000 mark. So per rack is like how many? 18, right? 18 times 40,000. So if you calculate it as 40,000 and each rack is like 18 times 40,000 is how much? 18,
A million?
40
Close
times
to a
20.
million?
Yeah, lah. So 40 times 20, 800, about 8 million, I guess, around there.
No.
Yeah, so there are the kind of numbers. It's 8 million.
Not 8 million,
then
right? 800,000, right?
times, 800,000. 800,000, and then people don't usually just buy one rack. I mean, maybe if you're a startup, you would, but then again, people that buy data centers actually buy like multiple racks. So usually if we go by the standard, it will be 576, right? 576 times 40,000. So that'll be 23 million. 23 million per 23 million per unit, per 576 unit. So that 576, 23 million, then if you divide by that 10 billion is 10 to the power of -1. So they need to sell like 434, I suppose. Yeah, around there. 434 of these, which could be quite easy to sell for them because it's just if you think like a data center operator buys these kind of things, then you see Meta itself already bought like what's 300 H100s, right? And then when the B100s come out, they're going to buy even more, right? Yeah, sorry, 300,000, not 300. 300,000 H100s. So when the B100s come out, they're going to buy like some amount of that as well to further increase their compute. And look, let's just think about it this way, right? Meta is earning money, and they are earning money because of the AI that they are doing that is actually doing up the good recommendations so that they actually increase their advertising profits. So if they think it works, then let's just see how Meta is kind of like the downstream. So just by looking at how Meta is doing, you kind of know like how the rest are doing and how Nvidia is actually helping Meta to improve. So you can kind of look at Meta as like the canary bird, right? Or to see what as how Nvidia is doing. That's how I would simplify it lah. Because it's not just about like LLMs, it's about everything in AI because recommender systems are AI. Whatever like Shopee shows to you on your screen, whatever Lazada shows to you, Amazon shows to you on like the front page, whatever Netflix shows to you, all this is all AI recommender systems, and behind it is all data centers that's actually like doing these algorithms some kind of work, right, to actually show you. Even YouTube is doing it. They are all doing it. It's just a matter of what is the TCO to make it make sense. And if we see that these other companies, because Nvidia usually reports their earnings like later than all the other tech companies by a month or so. So you can kind of see what's happening beforehand to actually estimate out what's going to happen in Nvidia earnings. Yeah.
I think let's follow up with these questions. YCX, next 4 to 5 years, Nvidia likely to increase revenue to 200 billion. How about after that? Will it remain flat, increase, or go back to earlier 10 to 20 billions revenue? Means that will this AI revenue be like a one-off things and come back, you turn back to 10 to 20 billion range?
Okay, to actually answer that, right, I can actually search like, let me search hardware. So yeah, I can see my screen, right?
Yep.
So let's just look at data center spending trend. Okay, let's just search. I actually didn't actually see, so let's just see what are the trends. Let's just see this one and this one. We can kind of see
what are the trends over here, right? Inventory or whatever it is not actually very useful, but let's search something else. Data center spending trend, and let's go images and see. We can see Gartner has whatever this number is in billions here. 2019, all this. Yeah, you can also see like this or this and all these things. So my point is, you can look at all these trends and see, look, 2022, there's around this kind of numbers, like 500 or whatever that's projected that is spent. And Nvidia is like, and you see this data center spend is not like one off, right? People don't just buy and then you see even Gartner, whatever that you are seeing over here, the numbers may not be accurate, but the trend is usually accurate. Okay, so the trend is usually accurate if there's no like demand shock or supply shock kind of things due to world events, which means that based on the trend itself, you see that data center spending only increases over time. It's just a matter of like this data center TAM, right? This total addressable market per year, how much of it is a company taking up? And if we are really moving into this generative AI way of doing work, right, which is not retrieval based and it's more like generative based, that means then you can kind of see that these data center operators, they will also be moving towards they are spending an allocated amount of capital, like maybe let's say 500 billion in a year, right? It's just a matter of what they spend that 500 billion in a year to buy. And in this case, based on last year, we can see that they spent about 50 billion on Nvidia, right? That means there's another 450 billion that's going to some other place. Is it likely that Nvidia takes another 120 billion of this 500 billion this year? Highly possible. What about next year? Maybe it's at like 500 billion again. Is it likely that Nvidia maintains that 120, that 150, that 200 billion, whatever it is? It is working within this pie. It's not, you can see what I'm trying to say here is that I'm addressing the question that is a one-off purchase, where we see the trend is not a one-off purchase. You can see the trend all the way back like 10 years, 20 years. It's not a one-off purchase kind of thing. It just goes up. So until we start to see reports whereby people say, hey, data center, we are really peaking, there's no longer demand, there's nobody's going to use any more internet services, nobody's going to use any more data services, compute is no longer necessary, then we can start to think about maybe the total addressable market will actually downsize. But till then, the trend is up. And it's just a matter of how much market share Nvidia gets from this 500 billion plus market that they take to, yeah, that's how I actually look at it.
Definitely good insight. What about those who think that because just now you are talking about the data center as a whole, right? Like total market, but there's this thinking like saying that maybe Nvidia offerings, right, and specifically those are GPU chips, right? It could it could become saturated. For example, once all these like Meta, Google, they buy enough B100 or B200, maybe over the coming years, they may not need so many new GPU. How do you like get some comfort that they will keep on buying? And it's not just like keep buying the same amount, right? If you want the growth to be sustainable, they have to keep buying more and more, right? So how do you?
The issue over here is that actually this same kind of questions has come up for like cloud. If you recall back in like 2010s when cloud was just beginning, right? There's always the same kind of idea that, hey, is cloud growth over? Turns out it didn't. Now the cloud growth is still growing, right? Back in the 2010s, that was the question all the time, where is the cloud expanding too much? There's too much capacity. Nobody's using any more cloud. But turns out people use more and more cloud because there is actually this. I'm not sure what rule or law it is, right? But the truth is that 80% of the data that's generated in this year, 80% of the data in the entire internet, right? 80% of it is generated in the last year. So or is created in the last year. So the data is actually ever expanding. Is as long as the data is ever expanding, all these services that is required to actually process it, to actually store it, is also going to increase as well. That's why you see, like 20 years ago, you have like what is the storage size of your computer? Like less than
Gig.
yeah. I mean, if you say like you have 50 GB, well, people will think like, wow, that's a lot. Then now it's like you say you have 2 TB and people are thinking, oh, that's normal. So that there has been like a 20, 30 times increase in that just on the consumer side. Just imagine on the scale of like the enterprise side and the amount of data that they need to store. Like think about all the software you're using, right? Has the software gotten simpler or has it gotten more complex? Just look at whatever software you're using, your iPhone, all the software inside, your computer, all the software inside. That has Microsoft made Windows 10, 11 simpler than the previous, or there's a lot more menus and customization available? There is, right? So these are the trends that if you understand this kind of trends thing, that people are spending more time, spending more effort and doing more work in this digital space, then there is no need to worry that there is going to be like a sudden drop off from like 200 billion to say 10 or 20 billion, right? Well, that doesn't make any sense based on the trends itself. Unless some kind of black swan event happens, which we cannot like say it may not happen or it will not happen. But this is the kind of you have to be rational and look at the trends and how it's actually moving, right? How the world is actually consuming. Well, instead of like thinking about like the nuclear bomb scenario whereby everyone dies off and nobody uses anything, correct?
Yep.
Yeah, that's how I look at it.
Thanks for the sharing. I think with the interest of time, I would just stop the video now because I think there are a couple more questions to go through. We definitely can't get it through in like short period of time. Let's split it into different parts. So we come back again next week if you are available. If not, I'll schedule another date with you YCX. Is that
Sure.
Does it work for you?
Yeah, sure.
Okay. Thank you so much for all the sharing today. We schedule another one. I'll stop the recording now.
Thank you.
Thank you so
Bye-bye.
much. Thank you. Bye bye.